is it going? This is Dave Bath and Beyond, and we're all about mortgages and more. My name is David Dowd, and I have my own company, David James Investments.
Bathsheba, Payoute, and I work with Gross Capital. We deal with over 100 lenders. We do commercial and all types of business needs. So just reach out to us. I'm licensed in Florida.
And also, my brokerage is Equity Smart Home Loans. We work with over 150 different lenders to help you get the home of your dreams. Now, of course, before we get started with today's session, I do want to warn everybody that this recording is happening on this date here, so December 29th, 2024. So, of course, always be careful about using what we're talking about today for your actual path of home ownership, or if you're a loan officer as your reference point. Always check the guidelines as they are changing a lot. Now, if you'd like to follow along, I will also place a link for the selling guideline for Fannie Mae up here, and also a link in the description below if you don't want to type, because I know there's no linking from that. All right, so in today's section, we're actually continuing chapter B2-2, the borrower eligibility, and we are picking it up here on B2-2-05, the Vivos Revocable Trust, and we're going to work our way through the home ownership education and housing counseling. And lastly, we'll finish it off with the first generation home buyer loans. Let's get it kicked off, shall we, with the Vivos. I always like saying that, Vivos, which is a Latin term, which means while alive, in case we're wondering about that. It can mean a couple of other things, but for this context, while alive.
It is a trust, so you could put your home in it. And let's go over some of the exceptions that they were talking about. So I'm just summarizing with my notes. It says, here's the exception if the property is held in a revocable living trust. This is a type of trust used for estate planning. So you'll see an attorney or an estate planner. And the person who created the trust is a qualified borrower. So you'll have to be the one that purchased the home. You have to be a qualified borrower. You have to be able to be eligible to buy it based upon your credit score, your income, your debt to income ratio. Fannie Mae will allow this property to be used as collateral for the loan. So this is an exception. So the trust will be used as a collateral. So that's what I wanted to summarize there. Into Vivo Rios Trust is an eligible mortgage, and Into Vivo Revocable Trust is a trust that an individual creates during their lifetime. That's why it's called a living trust. You have to be alive, and becomes effective during its creation time. So it is effective immediately, and can be changed or canceled by its creator at any time. Fannie Mae is to approve the mortgage loan. The trust must meet the rules when the loan is submitted. So like I said, you have to be eligible for the mortgage. So you have to get the mortgage. Once you get the mortgage, then you could put the mortgage into the trust. And this includes that it will become a permanent, irrevocable after one of the people who created it dies. So if someone dies that created it, then everything is in effect. You cannot make any changes on it because the person that created it is no longer with us.
Well, first and foremost, neither one of us is an estate planning attorney. And
thank you.
We're just on the internet also. So be very careful. But from what I have understood about trusts, we have the revocable trust, which is what Fannie Mae likes. They like that because you can change it. You have power over it. You are in control of the assets that are inside of that trust, as it is called. And so that's why they make the exception of having an entity known as a trust to be the person who is on the mortgage instead of just a person. Most of the time it has to be a living person, a natural person as they call it. And they're not cool with companies and things like that being on the houses if it's going to go through Fannie Mae. Commercial lending is a whole nother thing, so maybe that's obviously in that direction. But for Fannie Mae, no go. But this is the exception they make for this. So you might be wondering, the Inter Vivos Revocable Trust versus Revocable Trust, those are the same things. Now, don't quote me on all of that because, again, I'm not a lawyer, but from what I've read, thanks to AI and Google, basically it says, hey, those are essentially the same thing. You could use those terms interchangeably. But an irrevocable trust, the difference there is that, like Bathsheba was saying, you can't make changes to it, and you don't have control of the assets within it. Only the beneficiaries do. So
Mhm.
whoever those people are going to be, whoever you, because you can design it, you can make it, but once it is in existence, then you no longer have control of it. You can't make changes to it. The only person that can is the person whom you named as the beneficiary. So you're still alive, but irrevocable. That's why Fannie Mae doesn't like irrevocable trusts. And that's why they're also not down for there being a clause that it turns into an irrevocable trust later, because you
Mhm.
no longer own the asset in essence. Now, the reason people do that is because of taxes. You can avoid taxation on your assets if it's irrevocable, because again, it's not you, it's
Mhm.
something else. So that's the main reason people do irrevocable trusts. All in all, revocable or irrevocable, you're still going to avoid probate. I did see a lot of
Right.
sources that said you will avoid probate. I don't want to say taxes, but the court's dealings with your death and distributing everything accordingly. There's a lot of fees and there's a lot of court costs when it comes to probate. So I always say it's good to have a trust. I haven't set one up for myself personally as of this recording, but I definitely intend to do that with my son on the way. I think and recommend that everyone kind of looks into estate planning, especially if you've got people depending on you. It's just the same conversation you would have with life insurance, basically. It's like, hey, when should I get life insurance? Well, as soon as you are responsible for someone, whether it be in marriage or children or some combination thereof, you should probably consider, because if you go unexpectedly, then who your people that you leave behind, I mean, that's going to impact them greatly, most likely, especially if you're a breadwinner or someone who has an income of the household, that kind of thing. So again, not lawyers and not estate planners, but just some things that I know about it.
I noticed when I got my insurance, the younger you are that you do get your insurance, whether it be term, and term means for 25 or 30 years, or you get a whole life, which is you pay it forever, the lower your premiums are. I have a term and I'm looking into a whole life. Once you get like your mortgage and stuff into mortgage protection to cover yourself, and like the rate that I saw is about $120 for me and my husband. So I'm just being transparent with my internet family. I was looking into the IUL index
Mhm.
whole life. Have you heard about that, David? It's like the whole life insurance goes into a mutual fund, index universal fund, I believe it's called.
Hmm.
So I was looking into that. So there's so many different things. So do your due diligence, do your research, and see what's best for you. Insurance is important. The younger you get it, the cheaper it can be. So I would recommend that too.
Yeah, I'm not familiar directly with that, to be completely transparent, but I do know that we've discussed about indexes or indices in
Mhm.
previous videos where we
Yeah.
talk about how they're basing the rates or how they pool together certain mortgages for the mortgage-backed securities that Jeannie Mae is in charge of. So I think it's definitely connected in a sense of some of the logic that's used to determine the pricing of life insurance product and things like that. So as far as like it's based on an index, okay, yeah, no, that would
Mhm.
make sense. I've come from the world of insurance also, so it
Yes.
also kind of helps to see some of the connecting dots, some of the
Yeah.
parallels, if you will.
So I
Yeah.
want to correct myself. It's an index universal life. So
Ah,
you guys want to do, you heard of that one?
I have not, but
Okay, yes.
I
But
just I
yes,
was thinking of the abbreviation earlier, so sorry.
yes, IUL, the index universal life. So that is the one that it goes into the SP 500, and that way you can get the benefits when the growth is up. And if it goes down, then the floor is zero, so you don't lose your money. But
Nah.
there's a lot to look into it.
Yeah.
Be pricey, don't take our word for it. Just do your due diligence.
As far as recommended reading when it comes to this stuff, I recommend the Tony Robbins book, Money Master the Game. It
Hmm.
basically talks about all about finance, but there is a pretty good section in there that talks about life insurance and trusts. It kind of briefly touches on that there. It does a really good job of breaking that down in a simplistic way. So definitely check out that book. We'll probably leave a link for that down in the description below as well. There's a few finance books from Mr. Robbins. But either way, back to our subject here. So yeah, we can use revocable trust or inter vivos revocable trust as a means to get a loan through Fannie Mae, they accept it under the very specific conditions, because you're also thinking, well, how do you qualify with a trust? Well, it's got to be that the person who made the trust is also the one who's applying for it, or someone who's a co-borrower who's listed on that trust.
Yeah.
All of it has to connect. So it's basically just like we've already discussed in previous videos, where they're looking at you and they're looking at whoever your co-borrowers are for the qualification process. That'll still be the same. So it's just a matter of, okay, but is there a clause in there that says irrevocable later if you die? If that is the case, we're probably not going to touch that. You can change it later after the fact, but if you get another loan through Fannie Mae, then they're going to be scrutinizing that. They do mention that in here as well, because people get, tricky like that.
Mm-hmm.
And then, of course, it just talks about eligibility, which is the same as we've already discussed in the previous sections. Title and title insurance requirements are also the same, using the people on the trust as that basis point. So just so we answer those questions. And then, of course, the responsibility of the lender here is that we have to retain information that talks about these items in the loan file. Okay, so that's really important if we're using a trust right from the get-go. Now, a lot of times people will actually move their property into the trust after the fact, utilizing title and deed and things like that, or however that works, depending on the state, obviously. Sometimes you have the deed, sometimes you don't, even though you still have a mortgage, right? So definitely check with your local loan officers or whoever you're working with, your local authorities and state department, just so that way you don't accidentally overlook something important, especially when it comes to trust, especially when it comes to mortgages, my goodness. So yeah, that's everything on the Inter Vivos Revocable Trust. Next section here we're going to be discussing is the home ownership education and housing counseling.
Home education and home counseling are two different things. The home education is typically for first-time home buyers. So that is before you get the home. It's about 4 hours. You can do it in person or you can do it virtually. I didn't mind. It's like a self-taught. It was about 4 hours. They gave me some scenarios, examples, and they gave me some questions at the end. Then they gave me a complete final exam. And you have to do everything within 4 hours, not within 4 hours, but the whole training is 4 hours. They make sure that it is 4 hours long. And once you complete that, you get your certificate, you give that to your lender, they keep that on the file. So this just helps you with, just teaches you everything about when you get your home, the home buying process, how to maintain a home, budgeting, the importance of good credit. So it just gives you that education so you become more familiarized to when you're going to purchase your home and what comes in a mortgage, what is escrow. So it explains all that to you, that your mortgage is included with the taxes, the insurance, the principal payment, and the payment of the mortgage. So you'll understand that. Now, how housing counseling is once you get into the home and you're dealing with some unique financial circumstances, like housing issues, like you need credit repairing, locating cash for down payment, how to avoid foreclosures. If you feel like you're going to foreclose, you can reach out to a housing counselor. They can help you. Housing counselor is also available when you do non-QMs or you do a higher interest rate that is above what is the interest rate of what we have today, standard rates now. They will have you talk to a counselor to make sure that you understand, hey, are you understanding that you're getting a high interest rate versus average interest rate is 6%? You're getting an 8%. Are you sure? Are you able to pay that? Are you able to cover those needs? So are you being coerced to get this loan? So this is why the housing counselor is there. It is a third party that is not connected to the lender to make sure that you are making a sound financial agreement. And it's good that these are available and they have it in different languages too. So if you speak French or Spanish or Creole or Portuguese, they'll have it in your language so you'll be able to understand the terms so you can make a sound decision for you and your family.
It's really great that they make this a requirement. I'm always pro education. Now, of course, if you've been watching our videos, a lot of this will seem redundant, obviously, because we briefly brush on a lot of things that they're probably going to cover in there. But it's nice to know that there's a structure and that there's a cohesive experience where you can put all the pieces together, because we kind of talk about it throughout, but obviously an educational experience is that you get it all in the proper order, all at once, and that you have one understanding, one education that's intended for that course. And so that always has a lot of value, in my personal opinion. I haven't personally gone through home ownership education or housing counseling. So it's really cool that you have had that experience, Bathsheba, so that you
Mhm.
can tell people about which you had to go through. So it was a self-paced online course that took exactly 4 hours to complete the actual content of the course. Is that right?
That's right.
Okay. Yeah, that's pretty cool. I like
Mhm.
that. That also works really well with your schedules, right? I can't
Yes.
do it at this time and this, my
Yeah.
work schedule, got the kids, blah, blah, blah. You can do it at night when you put the kids to bed, or you could do it really early in the morning if you're, early person. What, fits your life. And I think nowadays a lot of things are coming that are self-paced and can kind of, adjust to your life, which is really nice. So
Mhm.
these housing education, housing counseling, like Bathsheba was saying, is really just to make sure that you're making a sound financial decision and not being taken advantage of by the industry,
For the
because
lending.
that has been a thing. 2008, right? That was proof of the proofs in the pudding. Really bad times for a lot of folks who were unfortunately being taken advantage of. Blank loan agreements, just sign here and we'll fill in the rest later. Yeah.
Wow.
Okay. That's never good. You don't even know what you're signing for. You
Yeah.
don't know what you're signing for. If you don't know what you're signing for, please, rule of all rules, do not sign something you do not understand. I know the fine print, those types of things, check the box if you agree. Okay, fine. I still recommend that you get at least a quick overview, a quick glimpse at what that's all about before you put yourself in a position where, well, you signed it, so you agreed to these things, and you didn't understand what you were actually signing up for. So this is a part of preventing that predatory lending where people have the education needed. And not just that, but I think also diving into personal finance, like you were saying, Bathsheba, just understanding, is this a house payment you're going to be able to afford? There's a
Yes.
lot of phantom costs to owning a house that's not a part of the mortgage process. Maintenance and upkeep and so on and so forth. Now, escrow, I've always think of it this way, like if you just need a quick version of escrow, because they throw escrow around like you understand, and most of the time, if you're a brand new homeowner or a brand first time home buyer, I should say, you're not going to know what escrow is unless you have friends or something, right? So just think of it as an account where all the money goes to pay for all the things that are involved with owning a home: taxes, insurance, the mortgage itself, the principal, and the interest. Those are the main things. Or what's the other one? Mortgage insurance, I guess, would be part of that too
Yeah.
in some
Or
transactions.
HOAs as well.
Yeah,
And
yeah.
there is a startup fee. It is a fee to start the escrow. They do make money through the maintenance. So just be mindful of that too. And with the escrow, they do like to take up to 2 months. But
Hmm.
if you're refinancing, it's about 6 months of payments upfront. So that can be a lot of money.
Depending on the expense of your house, and your
Yes.
mileage may vary, and also between states too, what they require
Yeah.
between companies. There's a lot of moving parts. But at the end of the day, if you're going to own a house, just know it's going to be capital intensive. I'm not
Yes.
going to sugarcoat
Right.
this,
Mhm.
right? Because I know that if I was reaching out to a professional, an expert, I would want them to tell me exactly what the experience would be like. And it's like, hey, if you're going to own a house, know that it's going to take quite a bit of money in most cases, unless you're like buying a fixer-upper. But be careful about that too, because
Yes.
fixer-uppers, that's a different kind of expense. The more responsibilities you have, the more power you're going to have when it
Yeah.
comes to the ownership, or not really ownership, but like where you live, right? So, for example, if you rent to live in your space, then there's very little power you have over the types of things you can do to the property. I'm sure there's restrictions galore when it comes to what can be done with the yard, what can be done with the walls, things like that. There's going to be a ton of restrictions. But when you own a home, then you can do pretty much whatever you want, as long as, assuming you don't have an HOA that's going to get on you about it. That's the other thing too. So even with a little bit more power, there is this expectation with HOAs, which I kind of have mixed emotions about personally, because there have been some outlier situations where HOAs take people's property away if they didn't
Yes.
comply whatsoever, which is crazy. But hey, this is more of a collective community type thing. So you kind of, if you're going to have an HOA, just kind of know that's the general consensus is, well, the curbside appeal of people who are going to sell in this area, that's going to be taken away of if you have this horrendous house that needs a lot of fixing. The fence is broken. You've got shrubs all over the yard and grass as high as your, top of your waist. things like that. People are like, well, I don't know if I want to buy a house in this neighborhood because, well, looks a little fishy, a little suspicious, as they'd say, for one reason or another. That's a bit of what you'll learn in the home ownership education and or counseling. I believe on this page, it also talks about, there's like a table, I believe it is. Yeah.
Yeah.
It shows you the differences between the two and what's involved with those differences. So a little bit more on the home ownership education, at least in that first part there, eligible provider section versus the housing counseling, where it just has to be the HUD or HUD approved agency, the Homing, Urban and Development, I believe it is. Otherwise, they're pretty much identical for the rest of it there. What we wanted to do here to cap off the homeownership education and counseling section is to give you a quick rundown of what that experience will be like if you're looking for a place to get that done. So
Yeah.
what you would do is you would go to this website, which I'll also put in the description below. It's hud.gov. Okay, this is the homepage as of this recording. So if this looks different the day you're going, keep that in mind. That could be definitely the case. And you want to find the resources link. So wherever that is, for right now, it's here on the site. So let's go to resources. Then from resources, we're going to go down to the HUD approved housing counseling agencies. That's the one you're going to want. And from there, it's going to take you to another page where you'll be able to enter in a zip code, the distance you want to go. So like 10, 25, or 50 miles away, radius wise. And then of course your state, or you could do and or state. So zip code and distance, or you could do state. And then of course you just pick your option here. If you're a first time home buyer, you're going to want to pick buying a home, but there's obviously some other options here. So whatever is your situation, make sure to pick that. And what's going to happen when you pick it is it's actually going to populate as tags here. So I'll show you really quick. If I pick buying a home, but I click off, you can see it's a tag here. So don't get confused like, hey, I picked it, but it's still there. You saw how I did that a second ago. That's confusing because you're used to drop downs. You pick it and then it goes back to being a closed drop down. So just know that ahead of time. And then if you happen to know who it is you're looking for, you can also put that information here. Preferred language, you were mentioning that earlier, Bathsheba, very important that you get it in your preferred language if it can be done, because you want comfort during this very big financial decision. From there, you would just then hit search, and then it would show you, I mean, in this case, I haven't entered a zip code, so I'll just put Texas in here since that's where I'm at. Tejas, there we go. And it's going to show me a bunch of results all over Texas. Obviously, you'll narrow it down a lot more than this. This is all over Texas. I mean, nobody does that, but just so you can see what it looks like when you do the search itself. So hopefully that is helpful for those who are going through this process and are required to do this to make that a little less painful. Yeah.
HUD has a plethora of information. Like I saw something that said homeless services.
Yeah.
So if you need someone that needs homeless services, if you want to know, well, does my city have any down payment assistance? HUD will show you how much and what is the amount and who to contact. If you're looking for SHIP, which is another version of down payment assistance, that's a grant, or it is 0% interest as long as you live in the home for 10, 15, 20 years. HUD has that available. If you felt like you were being coerced by a lender or you felt discriminated by a lender, HUD will give you the services who to contact. They'll let you know about fair markets rates, customer service, coronavirus resources. So there's so much information in this program that is available to us that's free. So I would definitely take advantage of it, look it up. If you have a question with anything dealing with mortgage, homes, go to HUD resources.
And the other one is the CFPB, another big one. It'll probably reference you over there, I think, if you're reporting fraud and things like that. But
yes,
they're the big guns as of this
new
moment in
sheriffs
time.
in town. Yes.
Yeah. So we'll see with the new administrations what happens, but hopefully that'll still be the case because it's kind of nice to have it all in one house.
Yes.
The mortgage industry. I think the big thing is to get the questions you still have answered before you proceed, because if you still got questions and nobody's answered them and you're about to sign the dotted line, consider not signing until you get those answers in a way that you understand, because people will tell you an answer, but maybe you don't understand. Maybe it doesn't quite make sense. If you feel that, then make sure you ask for clarity. Okay. It's not annoying, because believe me, you will thank yourself later.
Yes.
You make sure you fully understand what you're doing and why, and what those expectations are, because I think that's the biggest problem is that expectations were one way that you thought based on what was being said versus what actually is. Okay, I have been a victim of that myself. So just make sure that whatever lingering questions you have, you get those answers before you move to the next step. I feel like that's going to work for anything in life, but especially with these really big financial purchases like a house.
You can also contact HUD when you went to the research and we searched it. There was a number on the top banner. So you can contact HUD if you don't want to go, if you're not tech savvy, you can give them a call.
Like I said, the more questions you ask and the more answers you get, the better prepared you're going to feel. They'll give you information that gives you additional questions you would not have had otherwise unless you were exposed to additional information. So that's another thing too, because you don't know what you don't know, right?
You don't know, you don't know.
So you gotta get educated a little bit, just so that way you're making the best decision for you and your family ultimately.
With the transaction that requirements of homeowners education, I missed one of the qualifying ones, which is if your LTV is greater than 95%. So if your down payment is only 5%, you will be required to do the homeowners education.
If it's greater than 95%, then all borrowers first time, this is when it is required.
Yes.
So
like if you put down just the 3% for FHA, you're going to do the home education.
Yeah, unless somebody who's also on there, like a co-borrower, has already done the education, or this is not their first time buying a house, then it won't be required. You may still want to do it,
right?
Because you'll want to understand, depending on how you feel, who thought this stuff was required. I don't know why I never did it. So and I don't know how that happened. So I'm thinking back on it now, and I'm like, I don't know what happened there. Okay, well, guys, we are at the final section of today's show, and that's going to be first generation home buyer loans, which is a relatively newer thing, if I'm not mistaken. Well, at least it was updated relatively recently.
Yeah.
Past May of 2024.
It's a really great opportunity for those who have not been able to purchase a home before. As I said, it's a live-in property that you're going to live in. That subject property is your live-in property. You have to reside in it. And you can't have no other ownerships in different properties within the last 3 years. So maybe you had a home before, you sold it. It's been 3 years since you purchased the home or you sold the home, and then you can get a new deed so that you can be considered now first time. Other rules apply if no parent of the borrower has had ownership or interest in the property in the last 3 years to date, the borrower is aged out of foster care, or the borrower has been emancipated, then you'll be able to take advantage of it. It's a great program. It's also income-based, I believe. You just get a better opportunity, better down payment rate. Also, with the first generation home buyer certification, the identification of the first generation home buyer loans is currently optional for lenders. However, lenders can choose their certification, which is similar to what we were just talking about yesterday, the same type of 4 hours self-paced, or you can usually do it on Saturday, live class for 4 hours on a Saturday or Sunday sometimes. With this program, like I said, your down payment is better with this program. You get more advantages than just a traditional conventional.
Which is funny coming from a conventional guidelines, right?
Yes.
And Fannie Mae being one of the two entities that represents the conventional loan when people talk about that. So yeah, first generation home buyer loans. Well, when you hear the word first generation, you also think, well, there was no generation prior to this one, right? I mean, there's no zero generation. So first generation. So it's very specific, as we see in the breakdown as Bathsheba was talking about, with what that entails. One thing you also have to keep in mind is, as we've said in a previous episode, first-time home buyer doesn't necessarily mean you've never bought a home before. Definition-wise, in the mortgage industry, it's if you haven't bought a home within the last 3 full years. Okay, so if you've not done that, then you are by definition considered a first-time home buyer. So like if you want to take advantage of programs that talk about first-time home buyer, you could do that, which is really good to know. But that would definitely be one of the cases here. And if you're with a parent, they too are not, they're considered first-time home buyers in a sense. So that's what it's distinguishing here. But I also thought it was really interesting. It talks about someone who's aged out of the foster care system. So for those who unfortunately didn't have parents, had to go through the system, if you've aged out now, you can make decisions for yourself, or maybe you've been emancipated, where it's like, hey, I want to be an adult, even though I'm still a child
Mhm.
and I don't want my parents to have power over me. If that's you, be careful because there's still going to be state laws that determine how young a person can be to get a mortgage. So
Mhm.
keep that in mind also. I'm pretty sure the emancipated is like very few people are going to be a part of that because of that age restriction that is just very common across most states. But again, your mileage may vary on some of these pieces. So yeah, I think there would definitely be some advantages there if you
Yes.
qualify. It's probably laid out here very vague because of what lenders are willing to do in
Yes.
relation to this qualification.
And what your state too.
Right, exactly. What are the state laws? And then what are the lenders' rules? What is acceptable? What are they willing to do because of what does that mean? Because if you think about a first generation, that also means a lot of risk because they don't really
Mhm.
know like if you're going to pay on time and things like that.
Right.
Like they can have a general idea based on credit and things like we've talked about in the past, but ultimately, if it's first generation, that tends to be a little bit more riskier than someone who's done this before. It's just generally how lenders will look at it. So hopefully it means good things if you're a first generation homebuyer, if you are qualifying for that. But Fannie Mae has a little bit of information on here because, well, conventional is probably not the place most people go for their first time, but
Right.
sometimes I guess it can be. And this is one of those things that can help in that direction. That's what I interpreted from it anyway.
Yes.
As we land the plane here, guys, I'm going to put all of our information on the screen right now to get in contact with either of us. If you happen to be with Bathsheba over in Florida or with myself in Texas or amongst many other states, actually, check my website for more specifics. My loan brokerage can get out there. We would be more than happy to help you with your home buying decision. If anything, for just guidance, that's fine too.
Yes.
But make sure to subscribe and
Yes.
also to share this with folks that are maybe in the market for a home and need that education. Share our series. I think as a whole, it's very useful.
Yes.
And also make sure to like the video so it gets out to more people through the algorithm.
Thank you so much for joining us. And we just enjoy this. We do this really impromptu. We do a little research and then we come in and just be as symptomatic as we can so you guys can learn something. And if you learn something, we did our job.
That is where it is at. So, guys, until the next episode, I hope you all are well. This is close to the new year coming up. So, Happy New Year, folks, for everyone
Yes.
who's watching this at that time. But if not, hopefully it's being a good year right now because you're probably watching it during 2025. And with that being said, guys, this is Dave Bath and Beyond, where we're all about mortgages and more. Be blessed, and we will see you next time.
Bye-bye.
Bye for now, guys.